Income tax in art sale, Part 1. This is Simon of dongnam Accounting Corporation, Seoul, Korea. We are a member of Elliott Global Alliance, which is an international network of CPAs and lawyers around the world. Income tax in art sale. In art sale, there are some special regulations, some special clause in the law. Income generated from transfer of paintings, calligraphy works, and antiques, in abbreviation PCA, is deemed as other income. PCA means number 1, pictures, drawings, pastels limited to those drawn by hand, collage and similar thereto. And number 2 is original engravings, prints, and lithographs. Here, original means those made by the artist himself or herself with his or her own signature. Number 3, antiques, limited to over 100 years old. So, when the selling item belong to one of these 3 categories, then the income from that sale generates other income, not business income. So in the case of art sales, the very special thing is that even though somebody sells the artworks continually and repeatedly, still the other income, there will be other income, not business income. Usually, when sell continually and repeatedly, it will constitute business income. But in the case of art sales, uniquely, it is still other income. But there is exception. The seller has any physical facility for art sales, like a store, or registered with the tax office for art sales, then this means that he or she pronounce that he has a business intention and will focus on business. So in that case, this is not the other income, the business income. So, but other than art sales, usually business income is when the selling continually and repeatedly, because this is the seller's intention of business. And of course, the corporation, they have business income, but corporation, there's no other income. Very special clause in tax law in the case of art sales, there is a very unique and special clause of allowing other income instead of business income, even though seller sells continually and repeatedly. This is very important clause. Being allowed other income means being allowed a huge expense deduction. So this will be very tax-saving opportunity, and then the business income allows only the real expense, purchase price plus some incidental expenses. But in the case of other income, regardless of actual purchase price, the big amount, a big portion will be deducted as expense. So when the selling price is 100 million Korea won or less, then 90% of selling price. And when the selling price over 100 million Korea won, there are 2 cases. If the holding period is 10 years or more and proven by evidence, then still 90% of selling price will be applied as a expense deduction. But the selling price is over 100 million and holding price is less than 10 years or cannot be proven, then for the first 100 million Korean won, 90% will be applied and 80% in excess. So, but some special cases when the real expense exceeds 90%, which is the deemed rate. 90% is the deemed rate. In that case, that real expense can be deducted by submitting evidences. For instance, the selling price is 100 million Korean won. Purchase price is 100 million Korean won. Then the purchase price, the necessary expense is over 90%. In that case, the seller can prove his real expense is over 90%, and then that real expense can be deducted. Stay at other income. In the case where the seller sells continually, repeatedly, and meets one of the two conditions below, the income will be classified as business income. So first one is when equipped with a physical facility like business place for transaction of paintings, calligraphy works, and antiques, PCA. This includes the virtual business place like internet website or SNS, Instagram. And number two is when registered with the tax office for transaction of PCA. In this case, those income will be classified as business income, not other income. So, you know that other income is very favorable in terms of tax saving. So, individual art seller is better to try not to meet the above two conditions if possible. So, please delay having physical facility. Please delay the registering with the tax office. There are some cases of non-taxable transfer. Usually the four kinds are applied. The number one is that item is the works of living artists, not dead, living artists who are one of the two. One is Korean national. Number two is expatriate who are considered as Korea resident in tax point of view and works mainly in Korea. So Korean national works in overseas, no problem. He's still living artist and he's Korean national, so his items belong to this category. But expatriates have to work mainly in Korea. Okay. Number two is the PCA is not listed in tax law. This is rather vague clause. So the item listed in the law is pictures, drawings, pastels limited to those drawn by hand, collage and similar thereto, and original engravings, prints and lithographs, and antiques. For instance, sculpture or antiques less than 100 years old is not in the list, so selling these items does not automatically make other income. Whether it constitutes business income or non-taxable should be mulled over. Number three is the price of PCA is less than 60 million Korea won per piece, item, or pair. When an item is traded normally in pairs, then it pairs. So 60 million Korean won, less than that. And number four is the PCA is sold to government, museum, or public gallery, which is a kind of public interest. So when the selling of PCA fall into one of these four categories, there will be non-taxable. Non-taxable means the capital gain will not be taxed. The rate of withholding tax for other income is 22% by tax law, including local tax. But when the expense deduction is 90%, then actually only 2.2% will be withheld. And if the expense deduction is 80%, then only 4.4% will be actually withheld. And the difference between business income and other income. Who withhold the tax? In the case of business income, business person who register with the tax office or the corporation only is able to withhold the tax. But when in other income, every seller, individual or corporation, regardless of their position, every seller is has the liability to withhold. And withholding rate is 3.3% of the receipt of the selling price, and other income is 2.2 or 4.4%. And this type, the withholding is in the case of business income preliminary, and in the case of other income final. This is very important. And so this is preliminary. So in the case of business income, which the income will be added to yearly income and make some global income tax return. But when it is the other income, then it is final. So need not be added to yearly income. The withholding is finished, is closed. And clearance of tax withheld. So this is preliminary business income, so will be deducted as prepaid tax when compute yearly tax later. Which means that including this business income, yearly income like salary, real estate income, interest income, dividend income, including all these global income to be taxed, and this withholding tax of 3.3% will be deducted as prepaid tax. And other income, this does not include it into global income. This is not mixed with interest income, dividend income, salary income, blah, blah. So there is no need for make any clearance. Thanks for being with us. For details, please do not hesitate to contact our email. Also, please read this disclaimer briefly. Thank you very much.